Hi everyone, welcome to today's video. So there are basically two questions that are going on in the market right now. First question is that is this a good time to buy? And the second question is that if indeed it is a good time to buy, then what type of stocks we should be looking at because so many stocks have corrected. So on this video, I'm going to discuss with you 5 specific stocks that are traditionally considered to be very good stocks. They are available at a good price right now. Whether you should be buying it, whether you should not be buying it, that decision is up to you. I will simply present my analysis. Out of this, through my tone, the way I speak, you will get to understand which stocks I am bullish about, which stocks I am bearish about. So let us discuss both these points. And first and foremost, let me present a very quick commentary as to whether I think the markets are overvalued right now and whether it's a good time to enter the market or not. So here is a very quick technical commentary, and what we are considering here is Nifty 50, which represents the overall market sentiment in the top 50 stocks in India. And we are considering 1 month candle here. So every candle that you see, for example, this indicates the stock market performance of Nifty 50 over a period of 1 month. So what you will notice are 2-3 very important points. So the first thing that you will notice is that the market is now making higher lows. For example, you will see that the market fell here. It made a low here at 0.1. Then it rose all the way till here. It fell, right? So the second low was here. Then it rose again. It fell. It made lower low here. Then it made higher low here. So this 1, 2, 3 point, it is getting formed in this ladder manner, which is an ascending ladder, so to say. So very likely that the fourth step on this ladder will get formed somewhere here, then here, and it will go like this. So this is what the technicals tell us. This is the first critical point that you must remember. Second, there is a very interesting pattern that you can see, and this is called as doji pattern. So what this indicates is that when the market is actually falling, so the market has been falling from here all the way till here, and then a doji was formed. What does this indicate? This indicates indecisiveness in the market. So at this point I will name as point 1. Here the market was indecisive, and next month the market gave an up move. So the market has right now decided that it is going to give an up move, which is positive news. So in case you are building positions, then even from a mid-term to short-term perspective also, it looks like that the market is in an uptrend. Now you will say that, okay, Akshat, now you are doing post-mortem analysis. You haven't discussed about this earlier. Why did you not do this? I have discussed each of these single points on the member community tab, given the exact same commentary that I feel that the market is in an up move, and this announcement was made 10-15 days ago. So in case you are a serious investor in the stock market, you could consider joining my member community. The details are there on the description and comment box. So I give about my calls, whatever I'm buying, selling, why am I doing it? I give macroeconomic commentary. You guys can interact with each other. So all those facilities have been provided. So coming back to the topic, I hope the technicals are clear. Now very quickly commenting on the macros. So very recently you would have heard that the banking crisis was there. That to a very large extent has been solved. At least it has been absorbed in the market. Number 2, inflation had already peaked. Now inflation is coming back to that somewhat controllable level as per the governments. This is second key point. It's an entirely different debate. We'll have it some other time. But this is what the macros are telling us. Third key point about the interest rate. You would have recently read the news that RBI has stopped the hiking of the interest rate. They have paused it at 6.5%. The expectation was that it would go to 6.75%. It did not happen. So what does that indicate? It indicates that even interest rates have peaked. So these are all telltale signs that going forward in the market, worst case, the markets are going to stay sideways, and best case, more liquidity will be put in the market, maybe by decreasing the interest rate. And if that happens, the markets will rally like anything. So this is my overall macro commentary. So to cut the long story short, good time to invest in the stock market? Definitely yes. Please do not simply sit on the sidelines, watch the show, and then the stock market will start running and you will not be able to buy it. So let me give you an example, and please be very, very honest with me. Think about it this way, that when Monday market opens, and if it goes up by 1.5-2% in a day, which can definitely happen, then would you have the courage to invest in the markets then? Most of us would not. We will think, yaar, 1.5-2% बढ़ गया है. I'll probably wait. Then I will see. थोड़ा तो नीचे आएगा, then I will buy it. Then the day after, it again goes up by like 1.5% or whatever, right? Then again, you will keep on waiting. So This timing the market in the short term, it never works, and therefore in the short term you should not try to time the market. It's a very bad strategy. Even the best of the investors are not able to do it. So my suggestion would be that study the market, and if you feel comfortable and if you're confident about your stock picks, definitely do consider investing some money. We are very close to a bull run, or maybe we are already in a bull run. So with that out of the way, let me quickly discuss 5 important stocks with you that have fallen quite aggressively, and let me share my commentary with you. So the first key stock that we are going to speak about is Infosys. So the first key point about Infosys is that the results came out very recently and the results were not very encouraging. Even the management looked a little bit confused कि यार करना क्या है, not sure where the growth is going to come from. So general commentary was given that slowdown हो गया US में, therefore our stock price has fallen, this that. I've been saying for the last 8 to 10 months, please go and watch my videos, that I am not bullish about Indian IT industry. I got TCS at very low prices. I purchased it and I sold it, right? And then whatever new positions I'm building in Nifty IT. Please watch this section of the video about Infosys stock analysis. You will understand why. I will break it down in very simple, easy to understand language. And also a very, very humble request that please like these type of videos. Please subscribe. Majority of the people just watch and go away. They don't like the video. They don't subscribe. Please do it. It will help these type of videos reach out to more people. I know that you haven't liked it. So like the video now. And if you don't like the Infosys analysis, then you can dislike it. So the first key point that you need to understand about Infosys is that take a look at the breakup of where Infosys makes money. So it makes a lot of money from the US. So the dependence on the US and European market for Indian IT companies is fairly high. And this includes Infosys as well. Now what is happening in the global economy is, and I do agree with the Infosys commentary there, कि देखो US में there are a lot of problems that are going. For example, slowdown of the US economy, sudden spike in inflation. Now they are trying to bring it back. The US Fed looks confused. US banking crisis happened. So many problems have been there, and it directly or indirectly impacts the Indian IT industry. So no doubt about that from a macro perspective, this is not a healthy sign for Indian IT industry. This is point 1. Point number 2, you need to study the deeper reason for the fall of Infosys stock. So let me first show you the chart very quickly. So what you will see is that from the top, Infosys stock has corrected by roughly 26-27%. So this is a substantial dip in a way. But the point that you need to remember is that if you study the pre-COVID prices, you will see that the rise on Infosys stock price is still roughly 75%. So this is not a very low rise, so to say, that over the last 3 years, Infosys stock has gone up by 75%. So just because it has fallen by 26% does not mean that Infosys is an undervalued stock as of now. So this is the second key point that you should know. Now the third key point that you should understand is that you should study the US tech market and US banking market, because these are the primary clients of Infosys or companies like Infosys. They give a lot of back-end work to Indian IT companies, and these Indian IT companies export a lot of services to the US. Therefore, you end up seeing charts like this, where Infosys right now makes almost 70-75% of its money by exporting services to the US. So expanding upon this point 3, what has happened? They are basically consolidating their capacity as of now. They are not looking to hire people too aggressively. They are figuring out what to do next. So in simple terms, this is a consolidation phase in the US tech industry. What is going to happen, or what is rather happening during this time in the US, is the companies are going to decide that where is this next layer of growth that is going to come for us. For example, if you go back 3-4 years back, a lot of companies were focusing on cloud storage. So cloud was probably the biggest area that every big company was looking at. Now, what is the narrative? They are looking at AI. And this is the statement from CEO of Infosys. This is a very recent statement that even Infosys is going to focus on AI and developing AI capabilities, vagera, vagera. So here is a very quick flow chart, and it will help you understand Infosys business model in a slightly more nuanced manner. So this is what it would look like. So basically, when it comes to big banks and big tech companies in the US, what they do is that they decide on a focus area first. For example, it could be cloud computing, or it could be cloud-based storage, or AWS system that Amazon generally uses. And now you might have figured out that Amazon is actually making more money from its AWS compared to its retail segment, right? So all these things are there, that one focus area is decided, whichever is a booming area during that time. All the US tech companies, or at least a large chunk of them, jump onto developing their expertise. And then final step is that they try to scale. This is where these back-end tech companies like TCS, Infosys come into the equation, that they help these companies scale their areas of expertise very, very quickly. So this is the simple equation, and this leads to a start and stop effect in the technology segment. Now, what is the meaning of that? The easiest representation of that would be that you go and study the pricing history or stock price history of Infosys itself. So you will get an idea. So let me take you through that. So let us study the pricing history from 2014 onwards. So this is like December of 2014, the stock was at 580, 590. And all the way from 2014 to March or April of 2018. So 4 years, 0% return on Infosys. Then it gave a run up all the way till here. Then it again stagnated for how many years? If you compute, then it roughly stagnated for 2 years. Then what happened in this final leg? So this was a rally, and this was again a consolidation phase. This was a consolidation phase. This was a consolidation phase. The point I'm trying to drive home is very simple, that there is something called as start and stop that happens with the Indian IT sector. Why does that happen? It's very, very simple. Because when some big tech company in the US, it tries to scale the technology on which it is focusing, that is when the Indian IT companies make the most money. So that is the simple equation, and therefore I see very limited point in taking or building huge positions in individual IT stocks in India. All that, according to me, is a very, very highly risky strategy. And you know, people who have been watching me for the last 1.5 to 2 years, I have simply built my position on US tech stocks. Whatever tech investing I had to do, I had spread it on the US tech stocks only. I purchased TCS and Zomato. So Zomato is something that I still hold. TCS I sold, and whatever new positions I have built it on Nifty IT. Now you might have a very natural question that, okay, that if you're not a believer in Indian IT companies, why are you building positions in Nifty IT? So let me quickly clarify that. So there are two reasons. Number one is that we don't know to what extent these specific technologies are on the innovation curve. That is this mature enough, or our large scale solutions will be built around it and companies are going to benefit from it? We don't know at what stage of maturity these different things are. It might very well happen that cloud still turns out to be the number one money making machine for something like Amazon even in the next 5 years. We cannot say, right? Or it might happen that AI might gain more prominence. Now we don't know if Infosys, TCS, Mphasis, or which company will try to develop their expertise here, right? So this is the first key reason that I do not know. The second key area has to do with regulations. Now almost all the Indian IT firms, they export their services abroad. We can't be sure कि Infosys को ही contract मिलेगा या TCS only will win contract or Mphasis will only win contract. We cannot say that. So therefore, according to me, diversifying your bet is a much better strategy than picking concentrated bet on the Indian IT sector. So that brings us to the final question about Infosys कि Indian IT stocks को touch ही क्यों करना है? Why do you want to even touch the Indian IT stocks? Can't you just do away with them and invest only in banks or whatever? Yes, that's a very valid argument. But see, think about this, and please do not bring the nationalistic sentiment into play. Think about it rationally, that at the back end, you need some players to support the front end technology drivers. So you have Amazon, Google, Netflix, all these companies which are like leading the pack when it comes to technology. And at the back end, we need someone to drive that engine. So that engine will definitely be IT companies. So therefore, it makes sense to buy and build your positions in Indian IT stocks. No doubt about that. I don't know which individual companies are going to win, but Indian IT industry is definitely going to do well. And in fact, if you study the fundamentals, that fundamentally has something gone wrong with the Indian IT industry. So take, for example, Infosys only. So here you will see that it has an ROIC, or return on invested capital, which is close to 30.4%. And this is the last 5-year average. So the return that they make by investing 100 rupees, they are able to make 30 rupees additional return on it, which is very good. So they are not a capital destruction firm. On top of this, they sit on massive amount of cash flows. This is true for almost every tech company, that they are not primarily debt driven. They have a lot of asset light infrastructure in place. So therefore, with this entire cash flow, they are able to manage the situation, and this allows them to stay light. Even if they are not making crazy returns for 4-5 years, they are able to survive the situation. You as a retail person will make a loss by investing in these companies if you're not patient enough. If your viewpoint is कि यार आज Infosys खरीदा and I should sell it off in another 4-5 months or 1 year or 2 years, then you will not make any money. And if that is the perspective with which you are operating, then please stay away from this stock. Now very quickly, let us move to stock stock number 2, which is called as Gland Pharma. So let me first and foremost show you the price history of Gland Pharma, and you will laugh at it by looking at this graph that the stock has corrected by roughly 75%. So it has proven to be a wealth destructive stock. You will obviously say कि ना कुछ fundamental problem है. So let me very quickly take you through the fundamentals. So this is a zero debt company. What about profit? Is it making profit, increasing its sales? Yes, it has been growing like crazy. Even profits are coming in, no problem there. What about like FII, DII investing? Are they selling off their stake in Gland Pharma and moving away? The answer is no. In fact, they have increased their holding over the last 3 years. So then comes the natural response कि भाई 75% से how does the stock price crash by 75% if it is such a good company? Okay, so let me break it down for you, and there are 4 specific reasons why the stock price has corrected. So the first key reason is that you need to understand who is the actual promoter of Gland Pharma or who is a major partner of Gland Pharma. So it's a company called as Shanghai Fosun Pharma, and by the name itself you would have understood that this is a Chinese company. Lot of backlash against Chinese healthcare companies to begin with. They invested heavily in Gland Pharma around 2016-2017 mark. Now the situation in China was such, and situation within this parent group company was such, that they were struggling with debt. Why was that the case? So for that I'll have to decode the Chinese economy, but very quick points there, that housing crisis was there in China, internal healthcare issues in China, China exporting stuff. So a bunch of problems were festering. So as a result, this Fosun group had a debt oriented problem, and they were in talks to sell Gland Pharma, and that uncertainty remains. Reason number 2, there was general petty of pharma companies. Take a look at Dr. Lal Path Lab, Divi's Lab, you name it, right? All the pharma companies or healthcare oriented companies have been corrected quite aggressively. Multiple reasons for that, but definitely Gland Pharma also takes a hit because of that wide beating of the pharma industry. The third key issue has to do with the breakup of where Gland Pharma supplies its material or exports its material. For example, here is a breakdown of its entire revenue streams. It is exporting 71% of its product to the US, or makes 71% revenues from the US, and Europe, it has a very big arm. China, it depends quite aggressively. So all these markets have been subdued, and therefore Gland Pharma also took a lot of petty because of that. Fourth and finally is something called as inventory built up problem. Now this has been common. I had already explained it when I did the consumer durables video, that companies like Whirlpool, companies like Havells, bunch of other different companies, because the real estate market was not picking up, therefore these companies had produced a lot of inventory and it was just not getting sold. Something similar was happening in the pharma industry. That 2020 COVID came into equation. These companies produced a bunch of stuff, right? And even now their inventory is sitting. So this is a sitting inventory problem that even Gland Pharma is suffering. And here is a very quick snippet that comes from their management. And this is a problem that even they are acknowledging. Now comes the natural question कि अच्छा ठीक है, ये सब problems समझ में आ गई. Is it a good time to buy this stock? Now, I cannot tell you whether you should be buying, whether you should not be buying. It depends on individual circumstances, whether you want to increase position in pharma group, what your holding period is. So there are a lot of nuances that goes into picking a stock. So you have to decide for yourself, but this is what I'm thinking, and I'll just quickly share my perspective with you. That number 1, this company is clearly looking for growth. Now in pharma, there is something called as ANDA. So ANDA does not mean egg. It simply means new drug application that have been submitted to the FDA approvals. So if these new drugs get approved, then these will go into production and the company will sell them and make money. So this is what ANDA means, and the number of applications that the company has put, it is high. Number 2, they have expanded their capacity already. So this capacity actually generates result for the company over the coming years. So I feel that the worst for the stock is over. I have started to build little bit of position. As and when I build more positions, I will announce it in the YouTube member community section. So then comes the third stock, which is Page Industries. In the interest of full transparency, I had purchased Page Industry roughly 2.5 years ago. Then I sold it when it gave a good run up, and now I'm looking to rebuild my position. So let me explain why. So the first key point that you need to understand is regarding its stock price fall. So what you will see is that if you consider this, right, and this is the total stock price fall that has happened. So it has corrected by roughly 30%. Now, if you study the current level of price rise from the COVID levels, you will feel that, you know what, this stock is probably still overvalued, because 3 saal mein it has gone like 115% run up. It has given. But consider the pre-COVID level prices, right? So what you will notice is that it has just given roughly 34% over the last 3 years. Now, does this make the stock overvalued, undervalued? Final point that you need to consider is that consider here, right? This is 24th or 30th August 2018. So almost 5 years. and it has given 0% return as of now. So if you would have purchased this stock in bulk in August of 2018, and if you were holding it now, you would be sitting on a 0% profit on this stock in a period of 5 years. Now, this is the problem that happens when you are buying large cap companies at bloated valuation. There will be half of decades or even one decades where you will make 0% return. So therefore, I keep on insisting that please learn how to invest in stocks properly in case you are building direct positions. Otherwise, just simply go and buy index. You will make a lot less money, but at least you will generate positive returns. So anyways, coming back to the topic, I hope that the first key point is clear, that the valuations, at least as per my understanding, are not overvalued. Now let us combine this with fundamentals. So let us look at what rate the company has grown and what type of returns has the company given. So take a look at sales from 2018 level, right? It has almost doubled its sales over the last 5 years, right? So this is one. What about profits? Has it doubled its profit? The answer is definitely yes, it has doubled its profits. So please remember this, there is no problem from that perspective. What else? Does it have very high debt? The answer is no, absolutely not. This is not very high levels of debt for a manufacturing oriented company. Then comes the natural response that, okay, fir kyon gir gaya stock price? Okay, so same bunch of problems. The number one problem that the company has faced it, that it has been unable to increase the prices of its product. This is the downside of the company, that despite having a very strong brand like Jockey, it has not been able to adjust for inflation and pass on the price increases to the customers. Now, what is the hypothesis behind it? Yeah, see, when you are putting makeup, people can see you. Or if you are wearing an Apple Watch or using Apple laptop, then people will have a certain impression of you. So these are external indicators. Ab Jockey pen ke, now unless you are in ad, you are not going to show your underwear and all. So from that perspective, the company struggled to increase its prices. That's a simple understanding that I have. Now you'll make the same argument about Hindustan Unilever. See, in Hindustan Unilever's case, when you are going and buying a shampoo, you are worried about कि यार गंदा shampoo use कर लिया बाल ना उड़ जाए, right? So therefore you are at least little bit worried. Now what issue will you have if you are buying underwear which is of slightly lower quality? So this is my understanding of the equation. It is very difficult for a company like Page Industries to pass on the price increases to its customer. So what has simply happened on the stock is that the stock price levels have adjusted. It was given a very rich valuation. Simply valuations are correcting as of now. It is not as if that the company has become bad and it will not show any growth. That problem is there. Yes, competition will increase. It's increasing in almost every industry, but that does not make the company bad. Now you need to make a call that, you know what, whether the valuations are fair enough. According to me, these are okay valuations. Of course, no one can be 100% correct about valuations. So according to me, if you have just started to build your position and if you leave a little bit of margin for error, you will make good money on this stock. So this is my viewpoint. And again, I had made the announcement in the member community tab that I had purchased Page Industries. Okay, so let me talk about one more stock. I don't think I'll be able to discuss 5 because the video will become really big. And maybe I will make a separate video for my Hindi channel where I will discuss the remaining stocks that I wanted to talk about. So I will release that video in another 3-4 days. So the next stock that I'm going to speak about is called as Astral. So how much has the stock corrected by? Let me show it to you. So this was the recent high and it has again corrected by roughly 30%. Now what you will notice here is that there are 2-3 technical trends. First and foremost, let me quickly speak about that and then I will do the fundamental analysis. First thing is that this became one of the multi-bagger stocks during the COVID crisis, and you will see that it gave roughly 304% return during the COVID crisis. So if it has fallen by, let's say, roughly how much, 30-40%, so it's not as if that this has become suddenly highly discounted stock. So please remember this. This is a call that you will have to make. Also, if you compare it to its pre-COVID levels, then you will see that it has given roughly 110% returns over the last 3.5 years. These are very, very good returns. By no standard, this company is highly discounted as of now, just by checking the previous levels. Now aggregate this data by doing some fundamental analysis. So let me take you through some data. So the company has almost doubled its sales, or even more than that, every 4-5 years it does it. For example, go to 2013. 802. By 2018, it became 2073. Next 5 years, it has doubled again. What about profits? Is it translating into profit? So 2013, 61. 2018, almost 3 times profit. So yes, one can say that it went to almost 3 times profit, and it has been 3xing its profit every 5 years and 2xing its sales every 5 years. This shows that this is a massive growth company. So it growing by 110% over a period of 3.5 years, it does not look off from that angle. So from valuations viewpoint, can we say that it is overvalued, undervalued? We can't be sure. No one can be sure about the valuation, especially given the markets right now. This is the first key point that you must understand. The second key point that you need to understand is the market share story. So take a look at two graphics. First, let me break down the product wise segmentation. So you will see that the company makes almost 25% money from adhesives and 75% money from plastic products, जो pipe बनाते हैं उससे, right? And what is the market share of this company? Has it been growing? Has it not been growing? It is growing its market share front on almost every single category, which is absolutely impressive. There is no reason for a company that is growing its market share in a growing market. There is no reason why you should shrink its PE ratio. So this can be seen, and this is a very important point that I wanted to highlight. Now, the valuation question here is slightly off. I will do more exercises on valuation. I will try to value this company by using 3-4 more models. I haven't built a lot of position on Astral. Again, I will make the announcements in the YouTube member community whenever I am building more positions on Astral or cutting positions on some stock. All those details would be available. But in case you are looking to build positions on any of these companies, please apply the analysis that I have told you. You have to make a call as to how long you want to hold these stocks. The final stock that I wanted to discuss was SBI Life Insurance. I feel it's a good stock. Do let me know about your commentary along the same. I will release part 2 of the video on my Hindi channel. So please go and subscribe me there. I will release the video in another 3 to 4 days. Thank you so much for watching, and I will see you soon.